Hi traders, and welcome to Beringer Trading. My name is Jameson, and I wanted to show you a couple of the setups that were available here in our private Twitter feed in the Beringer room. The first one that we're looking at was on April 23rd. The ticker was PSDV and it was showing signs of accumulation. I noted that it was bullish above this broadening base of support, and I gave some price objectives of $2.50 and $3.20. I don't use a lot of fancy indicators. I really spend my time trying to understand the market behavior or the story, the balance between supply and demand. I put my efforts into focusing on price action, supply, and how prices react to support and resistance. It's not any more complicated than that. I do use point and figure charts to measure price objectives. So what I have here is, we have a stock that is consolidated over a period of time, and by using point and figure charts, you can actually measure the amount of cause that's being built and what impact or effect that it's going to have on price activity. Based on the amount of time spent in consolidation, this gives us the price objectives of $2.50 and $3.20. Now, PSDV has actually been declining. It was the character which that we actually started to see when we developed this broadening base support that kind of got my attention that there was a stopping action present to the current decline. You do have some abbreviations here that are actually taught through a methodology called Wyckoff methodology. This one stands for preliminary support. The next is selling climax, automatic reaction, secondary test. I'm not going to get into the mechanics, but from a basic standpoint, you can appreciate that PSDV is declining. And actually here we have this huge climactic volume that's present, but yet there wasn't a lot of downward price discovery. And the only reason you can ask, or if you ask yourself, if you're seeing this much volume and prices aren't breaking down proportionate to what they have in the past, ask yourself why. And the answer is, if there's a lot of bearish volume that's present and prices aren't responding, there must be some buyers on that side. So then prices still continue to fall. It's the character which they do fall that's interesting. You can appreciate that there's narrowing price spreads. And why is that important? Because the market is actually an auction, right? It's supply and demand. The character which the prices are following here, a narrowing price spread, suggests that supply is having a difficult time overcoming demand. And then we rally up here and we break down. So you can appreciate that as we rally higher here, it's too early because there's no buyers. If you look at the volume here, there's no demand. In the absence of demand, the market's going to drop and look for bids. That's exactly what happens. We drop down climatically, we have a lot of volume, and yet we still aren't breaking down that much more aggressively. Still too early to enter a position here. Prices rally back up, still no buyers, and now we break back down and we test this prior level of support, and you can appreciate that on this test there's not as many sellers. So you can appreciate a lot of sellers, there's less selling interest, and on this next test here there's not a lot of sellers. So it tells us now that supply is equal to demand, that now we have a lateral market. There's balance. Additionally, it tells us that supply, or that sellers, have become exhausted, that maybe that the bulls are accumulating the supply and they're starting to control the overhead float that's present. So prices continue laterally for quite some time. The character at which that we start to change through here, you can really appreciate the narrowing price spreads. You can even see the expanding volume, but it's not having a negative impact on prices. And then on this key session here, we actually break above the 50-day simple moving average, above several levels of resistance for an entire month, and we do so on expanding volume. That's a bullish observation. And then prices break back down and we close off highs just above this level of support on expanding volume. There's a shakeout that's occurring there, and bulls are buying that supply. We rally again, higher, and then we pull back, and then we just kind of fade here. And you can appreciate that there's no participation. And then now we have huge effort that has little impact here. This is a little suspect, as we think that if this is buyers here, why didn't this result in prices going to $2? It's because there is still some selling here. There's still some gaming, some manipulation that's going in so that longs can control the majority of the stock. And if we look at what happened shortly after, we can appreciate that after this, this session here, that prices pull back. It wasn't confident yet, but the character which that we pull back here, narrowing price spreads with no sellers, is a bullish observation. That means that sellers are no longer present and bulls must be in control. So it's a matter of trying to find a proper opportunity to get an entry where you have the lowest amount of risk. In other words, you want to buy support and sell in the resistance. That resistance could just be this level here, because it has been a resistance, or it could be the measurable objectives that we have. So you can appreciate that we actually break this level of resistance on expanding volume, and then we continue to trade higher into the 200-day moving average, and we almost achieved my upper price objective of $2.50. This is what we do at Beringer Trading. I hope to see you join us. If you have any questions, you can email me at jameson@beringertrading.com or even info@beringertrading.com. You can follow me at my private Twitter feed, Facebook, or our private Twitter feed.